I think indeed energy security is now such an important headline together with what used to be only energy transition. And it comes with all the wrong reasons, as you mentioned. How does that reflect into the LNG shipping? Well, I think you've seen that clearly the infrastructure developments in Europe to suffice from the lack of gas from Russia has been a theme discussed since the very beginning of March this year. That has created not really an imbalance in the market, but has created an artificial demand that wasn't planned for, and that has ended up with these amazingly high prices for a commodity that nowadays is being produced at the rate of 102 or 103 or whatever way, just to say above nameplate on LNG capacity. So on one side, supply has plateaued because simply there's not enough LNG that can be produced, and there's a lot of discussions of where the next LNG growth is going to come from. Demand has now increased in Europe to an unprecedented level. We're talking about 10 million tons a year versus the 3 million tons that we had, a month versus the 3 million tons that we had before. And plus we have the benefits of China that year on year, because of the COVID lockdown, has basically running between 16% and 18% down. So I think it's a dire period, the one we're going into from an energy security point of view in Europe. And for LNG shipping, that basically has meant that there's not really a big discussions on where how much LNG is moving. And from a strictly numerical point of view, the ton mile you have in moving LNG from US into Europe versus Far East comes at a relatively small discount. But charterers and traders, they don't want to miss an opportunity of making a killing out of a lot of their cargoes. Yeah. Therefore, the name of this year theme on term business has been, I want to be long shipping. And that has created the market that you see today with basically no open vessels this year, and already an interest in covering Q1, Q2 this year, which has literally never happened. You don't talk about shoulder months at the beginning of the winter the year before.
Fantastic. And I think, to your point, we're seeing spot rates at the moment 200k plus, which is unprecedented. So, an exceptional situation that we're in. But if you could just come back to some of those key drivers that you see over the next 5 years, because to your point about supply and demand imbalance, the shipyards are full. You can't take a ship delivery before 2027. Before we come on to the regulatory aspects of how some of the older tonnage may be taken out of the fleet if we're not careful, what do you see as some of those, I'm going to say, key drivers over the next 5 years for LNG, LNGC?
If you look at the supply-demand scenario, you can look at BNEF data or other analyst data. You see 2023, 2024, there's a relatively locked-in amount of supplies, out of whatever the 60 to 70 LNG carriers that the world can build. I think it's between 25 and 35 vessels. So a very low amount of supply, mostly contracted. Then there's a big step change in 2025 and 2026, where all the yards have locked in, all the contract they could. Some of them have even sort of been able to speculate additional numbers, especially for 2026. So you have a large amount of vessels being delivered in 2026. And if you want a vessel today, you're talking about closely to $250 million, and likely Q1 or Q2 delivery 2027 in Korea, and in China is basically 2028, unless you pick a green yard that has never done it. So if you have to segment it, I think we see a very tight market in the next 2 years. Then you see a supply-driven market in 2025, 2026. And then becomes the big question mark. Yeah. Because the big question mark is, there's something like between 80 and 120, 130 million tons of new FID capacity coming from the US. Is that all going to be sanctioned? Are all the FID being taken on time? And how much of this is going to come online in 2025, 2026, or 2027? That is going to determine the real new growth of LNG coming up. Now, I don't mention the North Field expansion in Qatar because the Qatari have taken the approach of my volume is already tied in with dedicated shipping. So typically is a net addition and discount to the model itself.
Yeah, so that with Mozambique, etc., are the one-off sort of projects that sort of shouldn't be seen as
and Mozambique is the other big question mark.
Exactly, a big question mark in terms of timing. But with that then, so we're saying ships today 250 million a pop, which we were paying 180 million less than 10, 12 months ago.
Probably 195, yes.
195. And that's basically because of the prices of steel, nickel, etc., in terms of the supply chain, plus just the capacity, within some of the yards. Therefore, slots not available, and then we're seeing regulatory change coming in. So we're seeing EEXI, we're seeing energy efficiency of existing ship index, we're seeing the CII come in, so the carbon intensity index, which could negatively impact some of the existing ships within the fleet. So I'm going to say the dual fuel diesel electrics and also the steam turbine fleets. How do you see that going to pan out? And I'm going to say as an individual and a company perspective, what are you looking at doing to offset some of that challenge?
I think many of the other speakers and Kari as well in their address has stated that the race to net zero is something that we should embrace now. And I think clearly the technology development in LNG has had an incredible hyperbole in the past years. So in a matter of literally a bit more than 5 years, we've moved from steam vessels to TFDs and from TFDs to two-stroke. And then now we're seeing the second generation of two-stroke with a much reduced methane emissions. So it is true that the LNG industry, from a shipping point of view, has really these three kind of souls that are attached to different three kind of emission footprints. So what's going to happen? Well, the one thing that is going to happen is that until now, the regulatory regime that has been in place has defined the sort of label that you're going to stick to every one of these assets. But the rules under which these assets will be able or not to operate have been left to the market.
Yeah.
So it's a regulatory label, depending on the market. And to give you an example, although these regulations are not in place yet, I mean, they're coming very soon, but typically the shipping industry is quite sort of proactive in this. So last year we saw about 9 vessels being recycled. This year the market went extremely high, so until now you've seen only 1 vessel being recycled. Plus the latest amendments to some of the allowances to allow especially the steam vessels to operate have significantly improved the speed regime that these vessels can operate under. All of this to say that it's very difficult to predict the amount of discount or deduction to the supply and demand curve that you're going to have in the next, call it 5 years, in terms of vessels that will be recycled. And from a certain point of view, you have to probably believe that it's going to be really a market-driven incentive rather than a regulatory incentive. I still believe that at some point towards the end of 2030, the regulations are going to bite more than they are today. And some of the charters will start filtering through this in a different manner. Now, what does it mean for ship owners? I think, one, you have to look at the strategy that you want to have in terms of what's your fleet profile you want to keep. On the other hand, you can also be very tactical, and I think that being tactical really depends on the financial situation that you have with these assets. Because some of these assets will be fully paid off, so your break-even is going to be extremely low. To give you a reference, I mean, typically for a steam vessel that is fully paid, your break-even is below $20,000 per day, and we've seen rates for steam vessels exceeding the $60,000 per day in these terms. So that gives you an envelope of opportunity where even those kind of assets that the market might discount as standard assets must still remain around because they will be profitable for everyone.
And do you see opportunity there for technology insertion? I mean, there was an announcement at GasTech, I think a couple of weeks back now, which was basically around looking at how do we prolong the life of some of the steam turbine ships through basically electric drive type propulsion onto the gearbox so that it actually can sort of operate more efficiently? Or do you see that this will be a charter party I'm going to say, driven aspect in terms of slower speeds that might go outside the charter party contracts?
Trying to answer your question, I really see 2 points. One, I do believe that operation of LNG carriers is a partnership, as many others have highlighted here. And the reason is, one, contracts in the LNG world are always a charter party.
Yep.
So there's no spot voyage, there's no COA, even a 10-day voyage is a charter party. So the executions of charterers' orders has effect on your CI, has effect on your emissions, and has effect on your AER, and so on. And we've seen, for instance, for us, we have increased our AER emission from 2020 to 2021 simply because of the pattern of, call it, following orders from our charterers. So it's not our problem alone, it's not the charter problem alone, it's a partnership that has to happen with improving our tools and being able to predict more how the operation of the vessel is going to be. So it's not only the efficiency of the asset, but it's the efficient use of the asset that is going to make a change. That's number one. The second thing is, I do agree that there are immediate technologies, or let's say technologies that have a relatively short time to market as soon as they mature for LNG. I think fuel cells are by far the most important ones, and I believe carbon capture, especially for LNG, given the fact that the purity of the carbon that you emit, can be a technology that we, at least we as GasLog, are betting on. We have to JIP with yards in Korea working on it.
So I think building on that, because it's a key one, and I think we heard it again upstairs from Carrie, but LNG is not a transition fuel, it's a fuel in transition, that's going towards bio-LNGs and synthetics, etc., that will sort of definitely answer a lot of the questions that people have. But talking specifically around carbon capture, and I'm going to say the elephant in the room of LNG, which is methane, on a life cycle basis, and I'm going to say the environmental damage that can do. What are you looking at around methane abatement type solutions or methane abatement technologies?
I think Scott before was very eloquent in giving LNG a few labels, and I think he caught the point very well. I think we'll look at a regulatory approach where at some point we'll define whether it is a tank to wake or a well to wake kind of approach. That's one thing. The second thing, methane emissions or fugitive emissions are a very important part. I mean, it has been recognized even at the COP26 last year. This was something that we need to make some headways on. And for the first time, we did live measurements with Cheniere on board our vessels to unveil where the methane emissions come from. And I think it's a great study. It's published and it's online for everyone to see. So methane, the whole methane chain, up and down, has to look at its emissions in order to be more sort of appealing from a decarbonization point of view. I still believe that LNG, the biggest problem for LNG now is LNG pricing. I mean, I think it is the fuel of today, and I think it is the fuel of the transition, because it clearly provides a 20 to 25%, depending how you see it, benefit on emission basis on the same calorific value against other fuels. And it has an established supply line and technology that is widespread for everyone to see. But the pricing is actually making it completely unattractive right now, so much that even our charterers ask us to burn fuel rather than boil off in many of our voyages.
So that's a key point, because of the price volatility as to where we are at the moment. Futures market indicating that that's going to stabilize. To ensure that the investment goes, or the necessary investment goes in around carbon capture through the life cycle anatomy of the fuel, how do you see those changes panning out over the next 5 years?
I wish 5 years was an horizon large enough for us to define what kind of investments are there. I'm afraid 5 years are probably going to be a great time to incubate the dawn of the next technology. And from a shipbuilding point of view, you have to keep in mind this. We're now contracting in the largest and typically the most prone yards to do meaningful developments at good cost and good scale, so the Korean yards, and they are basically full until 2017. If you say that we need another couple of years to define better the scenario that we have, it is likely that these yards will be fully contracted almost until 2030. And we know that in order to make a dent into the hyperbolic curve of development to net zero, we need assets in the water by 2030. Yeah. So I'm afraid we're really running against the clock, and I'm not sure that I'm giving you the right answer for these 5 years, but I simply don't have it.
Yeah, and then I think more broadly, how do you see LNG as a sustainable fuel going forward? I'm going to say the transition pathways for LNG, how do you see those panning out?
Again, what's happening today is the same amount of LNG is being produced from everyone, including from Russia, just going somewhere else. Clearly the world is going to accept and use the additional LNG that's going to be produced. Hopefully that will come to a discount to more polluting fuels. But if LNG wants to, and many analysts believe that with what's happened this year, LNG has won another 5 years into its critical development from maybe 2030 to 2035 or 2035 to 2040, depending on the way you look at it. I think that at some point you'll have to look at LNG has to clean its act, as we discussed, more maybe on or as much on the shore side as it is on the ship side, and then the pricing will have to find a different way. I don't think there's much more than this that LNG can do to make itself more appealing, because the amount of investments that you need to make to either get your vessels ready or to transform your vessels is always going to be on that significant investment there. It all depends. If you have an alternative, cheaper option than this, then,
which we don't have today.
Well, yeah. Eventually we will have. So I still believe the market will define where ship owners are going to invest and bet their money on.
So Paolo, with that, I'm going to say a huge thank you. I will also say a huge thank you to the audience today, and also to Capital Link for hosting this. In summary, I think, where are we? We've got $200,000 a day day rates. We've got 250 million per ship. And we've got some gas prices that are exceptionally high. But the reality is that natural gas is here to stay. It will be the replacement for coal in the overall sort of economy of the world. And therefore, we need to look at how do we maintain the existing fleets through answering some of the questions around methane abatement solutions. And we also need to look at new construction ordering to ensure that we can meet the supply and demand challenges that are coming over the next 10 years. But with that, thank you very much indeed again, Paolo.
Thank you, Andy. Thank you, everyone.